Now, the 3 candle series provide more color because it gives you a better context. The more series of candles that you have of the same color, okay, 5 red candles and then a doji, or a hammer, or a star or a hammer, okay, 5 red, 5 green candles, that gives you more information. So as we say, the doji, hammers, these are all single or double candle situations, but when we get 3 or more candles, a three candle sequence, that's when we actually start to get some real information. And this is one of the most important things you're going to learn. And they're called market structures. Okay, and they are 3 candle formations that will give you a potential reversal area. Market structures form in the markets all the time. In fact, technically, from the moment the market opens to the moment it closes, all stocks are in some type of a market structure. Either they're going they have a market structure up or a market structure high or a market structure low. Okay, so if a stock is trading, it's within one form of a market structure or another. Now, that doesn't mean you can play every single market structure. You have to kind of filter it out, and I'm going to show you how to do that. But the whole concept of market structures was created by my colleague and co-author at Underground Trader, Dr. Russell Lockhart. He discovered these things because he realized that the markets are fluid and they're continuous in all instruments in all markets. And throughout the day, stocks are going to form market structure highs, okay, at highs during the day, and market structure lows off the lows during the day. And from there, you end up getting waves up and waves down, just like the ocean. And these turning points will always start with some type of a market structure formation, and they're going to end with a market structure signal. Whenever your stocks are making new highs or new lows intraday, okay, or weekly highs, monthly highs, 52-week highs, those are situations where you want to watch for these market structures, because therein lies an opportunity. Either an opportunity for the continuation or a reversal. And because they are new highs at certain periods, they are significant. Now, for now, because we're going to get a little more advanced later on in the courses, but for now, understand with market structures, you want to use the candle closes. Okay, they give you more confirmation. And as far as the wicks and the tails are concerned, right, we want to just hold off on using the tails and the wicks on the first 2 candles. Okay, the 3rd candle we do use the tails for triggers on the signal. So market structure high looks like this. You basically get a new high, a higher high, okay, and then a higher low. Now, once again, we're going to go with the closes. So you're going to get a new high close, okay, a higher high close, and then a lower high close. And when that forms, the low of the candle, not the body, the low of the candle then becomes the trigger for the market structure high. It means the market has put a high in place and the price action is reversing back down. So that is the trigger for the market structure high signal. And then when that forms, the general rule is to keep a trailing stop above the high of the 2nd candle. Okay, so that would be up here. Now, with our rifle charts and our tools, we can pinpoint a lot more detail as far as stops and targets and stuff are concerned. But for now, I just want you to understand the essence of these market structure highs and lows. Now, for a market structure low, it comes at the end of a sell-off. Once again, the highest filter is going to be using just the candle closes, okay, not the bodies, but the closes on the first two candles, okay, and then the high, or the candle high, okay, on a market structure low on the third candle. So we have a new low, close, a lower low, close, and then a higher low, close. And the high of the higher low close is going to be the trigger for the long. So when this breaks, and literally one tick higher, and that's the long signal. Now the stop has to be below the the candle low, okay, of the second lower low candle. Now I know this seems a little complicated the way I'm explaining it to you, but trust me, when you see it enough times, you'll be able to spot them literally with your eyes closed. Maybe just peeking a little bit. Market structure low. Okay. Now market structure low can form just on this, okay, but it doesn't trigger, doesn't give a signal until this is broken. Now what you're going to find a lot of times, you may say, well, Jay, how do I know if it's the final low for the day? I mean, market opens up, it hits a low, all right, and then what happens if I jump in and get stopped out? All right, well, that can happen when you just use this particular tool. But understand, you get a new low, a lower low, okay, a higher low, and the reason why in situations like this the market will go lower is because they don't break this trigger. You see? And this trigger has to break, and when that breaks, that causes shorts to get flushed out. Okay? And trust me, it works. I've seen it a lot. See it every day, actually. So, just to go over this again. Market structure high. You need 3 periods, 3 candles. Any time period, it's a series of 3 candles, okay, where you get a new high for the day, all right, on the body close. Then you get a higher high, and then you get a lower high close. And on that third candle where you get a lower high, the candle low marks the trigger that if that breaks, if it ticks below there, now that has just put the nail in the coffin, and bam, it is technically a confirmed market structure high. And when a market structure high forms, then the trail stop is pretty much placed on new highs for the day. And these are very good short signals. Now, in the beginning, we want to be very stringent by using just the candle closes on the first 2 candles, right? And only using the intraday high or low for market structure highs and lows. As you get more seasoned, it is possible to use the bodies, the wicks, the tails of the candles for earlier signals. However, when you start loosening things up, what happens? When you loosen up those filters, you'll get an early signal, but the trade-off is you can also get chopped more often. You can also get more head fakes, more fake signals. Okay, so keep that in mind. Also, whenever you get a series of 3 or more candles in one direction, you can use a market structure high signal rather than using the high of the day, the high of an excessive grind, on a 5-minute chart where 7 green candles are going. Okay, that is a nice spot to use a market structure high signal. Okay, or 5-minute chart where there's 7 red candles to the downside. Wow. That's a nice place you can consider using a market structure low signal. But for now, the rule of thumb is only on intraday highs and lows will you call it a market structure high or low. So here's a good example right here. On DDD, And this is just a plain candle chart with our stochastics engine. You'll notice how, okay, new highs here. All right, now, bam, we have a new high, right? New high on the close. Now, the second candle makes a higher high. You see that? Makes a higher high on the close. And the third candle makes a lower high. All right, now, this is almost, excuse me, and this is almost like a bearish engulfing. Now, if you want to be really, really strict, you are allowed to extend it past the one candle, okay? 3 candles, I mean. Many times what you're going to find, guys, is that the body may actually be 1 or 2 cents above the second higher high, okay, or 2 cents below the second higher high, which technically then makes it a market structure reversal candle. All right, but if you want to stick to the book completely, then you would actually go to the next candle, which now you see is a lower high off the highest high. You see that? But this is good enough if you want to keep it to a tight three candle series, which is what what we're doing now. So then the trigger for this, okay, the market structure high would not confirm until the low of this candle gets taken out. And notice something, guys. They opened it up. They opened it here to try to hold that. Okay. Sellers still came in and they triggered it. So they triggered this market structure high. They tried to bounce it. They held it for a little bit. Does that mean you stop? No, because here's the thing. Your stop would have to be up here. It would have to be a new high. So above 53.30, and then let's say 53.05. Okay, well, let's just say 53. Okay, trigger. You're in short. It pops a little bit, but you have to keep your stop up above 53.30, and then it continues lower. Okay, it continues lower all the way down. Now, when you're looking just at the candles, right? That could, it's you can play simply by the candles, but you have a pretty wide stop, and you don't know how far this thing will be going down, and you can't really tell. Oh man, it's coming down nicely, but how much is too much? How much is this thing oversold? And that's why the stochastics right here give us a nice picture, because as you can see, when we go by the rifle chart rules of pups and mini pups, what we notice is this is pretty much a counter candle, right? Green, 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 counter candle. And what's the rule on counter candles? The body close break is a short signal. So do you see how the market structure high signal overlaps and confirms with the mini inverse pup signal? Now on this chart, once again, if you want to be very, very tight on the filters, okay, then yeah, you would go with the actual lower high. All right. But like I said, if this is a red candle and the bodies are even, very even, like the close high, the higher high close is even, and then they open it near the higher high and it closes red, okay, then that's good enough for me. Now, like I said, this is a mini inverse pup, but in order to interpret the mini inverse pup, okay, this is a different example, but it's pretty much the same thing, guys. Pretty much the same thing. And I want you to see something here. And this is on Tesla. Okay, this was the prior high. All right. So now Tesla gets actually this is a new high close. Okay, a higher high, and then a lower high. And you see that lower high? So now look at this thing. This is the trigger, right? So the low of the lower high, okay, so look at the next candle. The next candle opens near the body close, right? Look what they try to do. They try to bounce it, and then they couldn't bounce it once they break the low, okay, and that is your market structure high signal right here. What happens? The stock collapses, and then it tries to bounce again, but it just can't, and then it continues to collapse all the way back down. Okay? Now, understand something. When we add the rifle charts, which include the 15-minute moving averages, simple moving averages, and the 20-period moving average, and the upper and lower Bollinger Bands, look what happens. You get the initial sell-off, you get the bounce attempt, and as they try to break the 5-minute 5-period moving average, look where the 5-minute 5-period moving average is, guys. It's right at the low of the market structure high reversal signal candle. Excuse me. So when it rejects, it collapses. Boom. See that? As the mini inverse pup takes over, and it comes on down. So you see how helpful this is? Because before, if you went just by a mini inverse pup signal, all right, then you would simply wait for it to pop, try to break, couldn't break. Then you use the counter count, the body low, take the trigger, all right, and then yeah, you'd still get a short. But when you actually spot a market structure high, you can actually start shorting it right here. Once this thing breaks, you can actually start shorting it right here. Now, here's another clue that this was going to be a big move. Look at the Bollinger Bands. Look at the Bollinger Bands. When the Bollinger Bands compress and contract, that's only temporary. Now, it may seem like it's forever, okay, but in all reality, it is a temporary thing because Bollinger Bands will contract and then they will always expand. And the only question is, in which direction will they expand to? See that? And when you get a market structure high that comes in, cross down, and a mini inverse pup, okay, that tells you, well, this thing is going to the downside. But the reason why this is so significant when it spends 1 hour, almost an hour compressing, okay, contracting, is because when they expand, it tells you, oh, wait a minute, you know, this thing could get some pretty strong downside, right, because it spent an hour compressing. See that? Actually, more than an hour, because you see how tight the moving averages are. So that's an example of a market structure high on a rifle chart. All right, we're watching Foot Locker here, symbol FL. After the open, in a wet climate, 1 minute's got a pup, 5-minute make or break, and look at the 15-minute chart. It's got a beautiful looking 15-minute pup breakout. Now the 1 minute stochastics cross back up. Notice we're trading right around that Stinky 5's upper range, 45.62. Stinky 5's 45.60, 50, and 40. Now look at the 1 minute. It's got a counter candle. That red candle right there is the counter candle. If it can break through the 1 minute counter candle body high, then that's going to trigger the 1 minute mini pup, which will power it towards the 1 minute upper Bollinger Band. Okay, and that's the nominal gain. But keep in mind that this is after the open. This is during the first 30 minutes and after an earnings gap. So we've got a lot of potential action here. We have a lot of potential, well, a lot of HFT and algo-driven action that's coming into this stock. So we're watching that 1 minute. Now it's testing the 5-period moving average. Now notice on the 5-minute chart, the 5 minute has the pup breakout forming that on the moving averages charts. However, the stochastic still needs to cross up to go ahead and detonate that thing. But we have the anchor with the 15-minute, just classic, beautiful pup breakout with the stochastics crossing up at the 80 band. So we got the 15-minute that's got a pup, you got a 5-minute that's got a pup, but you need the 5 to cross up to detonate, and then you have the 1 minute, which is the trigger, and that one also has a pup and a mini pup, okay, should it break through the counter candle high. And so far, you can see right now that 4580-ish, okay, that's your counter candle body high area. So 4580, if we can break that, then it should set off the 1 minute mini pup, which should then set off a chain reaction, a detonation, a chain reaction, and then a break. And look at that, 4580 overshoots, and look at that, buyers coming in, shorts getting squeezed, algo's going to work, 5 minute stochastics finally crossed up, so now you have the 5 minute pup breakout, and you have the 15 minute pup that's always been there. 3 lanes with pups and mini pups give you what? A perfect storm breakout. Okay, triggers above 4570, and actually 4580 break was the real trigger there. That's what got the 1 minute to form that mini pup. Now the 5 minute stochastics have now crossed up, so without a shadow of doubt, this thing is in a perfect storm. And look at the action. The 1 minute upper Bollinger Bands are tagging near that 46 area. That's your nominal upside. Okay, but like I said, this is a perfect storm, and this is in the wettest climate of the day, which is that first 30 minutes of the open. So now you got the mini pup that's getting thrusted here. Now it's nearing the 80 band. You see that 46 testing. You see the 1 minute upper Bollinger Band just up to 1 minute upper Bollinger Band slope and just updated to 4609, and kaboom, they're pressing the 1 minute upper Bollinger Bands. Now 1 minute upper Bollinger Bands are sloping higher, okay? So that's the one thing you got to keep in mind. Keep an eye on that 4620 area right here, because that was the high of the day on the third candle after the open. And here we go. Now we're trying to break through the high of the day as the 1 minute makes that mini pup towards the 80 band. We're trading above the 1 minute upper Bollinger Bands. And as the bears desperately try to put in some type of a top or a star, the 1 minute 5 updates. Now it's at 4588. And the 1 minute upper Bollinger Bands have now updated too, also to that 4620 area. And the 1 minute stochastics is pushed through the 80 band. 5 minutes got that pup breakout, and the stochastics are reaching the 80 band. 15 minute chart has that beautiful pup breakout. Beautiful pup breakout, and the stochastics have already crossed up through the 80 bands at the 89 band now. So you got a lot of people watching that 4620 area. It's starting to break. It's breaking the prior high, making new highs, squeezing here, squeezing, and then here come the algos. The algos come right in because they know that shorts, the bears, nobody's profitable if they're short now at this point, and they're getting driven here. Yeah, 4630s, and they're just muscling this thing now. Absolutely muscling this thing. We're trading above the 5 minute upper Bollinger Bands. The 1 minute upper Bollinger Bands are testing at that 4630 area. 1 minute stochastics is around that 95 area. And it's at this point where the shorts are crying uncle, the algos smell blood. And they're just holding the bids. And look at this. Here's the sweep. Ba-bam! Pa-pow! Kaboom! Look at that. Sweep. Sweep. Perfect storm breakout. It triggered off the 4570 and squeezes up to 4674 for over a 1 point price surge, thanks to the algo HFTs and the perfect storms. You need the perfect storms to be able to catch the right side and join the move. Okay, so this should look a little familiar. We just went over that in the last video, the components of strategy. So what we're talking about now is the trade sequence, okay, the application management. But once again, when it comes to the strategy, this is up to the general indicator tools with rifle charts, chart patterns, and the rules. This is something the general must already possess. He must already, or she must already have that. And that is applied in the pre-trade. So, as far as strategy application, further strategy application, all right, we're going to go over that. Well, we're going over that right now. So this is video 8.